Hi traders, welcome to Admiral Markets. My name is Chris. Thanks for joining us in this live webinar, and I'll be focusing on continuation chart patterns in this webinar within the larger scope of trading chart space within market structure. Trading chart space within market structure. What does that mean? Basically, market structure is support and resistance, trends, and patterns. And when you analyze the financial chart using those three things, there are at times trades that offer a potential movement where price, you know, bounces and moves more than just a few pips. It has maybe a trend and it's expected to continue to the next target. So those are moments where there's more chart space. So I wanted to focus on that and also explain how we can use chart patterns for that purpose. All right, so we'll dive into some live examples in a bit. Just two things I wanted to first share with you. The first is that Admiral Markets is having a special Christmas offer. So check out the spread rebate by going to admiralmarkets.com and check out the full details on that website, on that page, I should say. And second of all, please note that trading for exchange and global financial markets in general is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. Please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity to find out if this webinar is suitable for you. All right, so that's some organizational and risk elements I wanted to, or parts I wanted to share with you. With regard to that Christmas special, just head over to admiralmarkets.com and you'll see here the red button, apply now. Christmas comes early with Admiral Markets. That's where you want to be. And if you're already there, you can check out other useful and valuable information like analytics, our technical and wave analysis, and articles, and some useful tools like market heat map, market sentiment, education as well. A lot of programs here on the right side, as well as new live webinars, of course, each week with Nenet and myself, and live trading ideas on top of that. And of course, you can discover what you can trade, all kind of different asset classes, and also different platforms, etc. So a lot of info here. I'll be using some of that technology in this webinar. Let's take a look at the live charts right now and see what's going on with regard to the live market. We'll start with the Forex market as we always do. Take a look at the currency pairs. All right, so first of all, as always, euro dollar. This is the 4-hour chart, and price is moving up. It is showing bullish momentum at this point, but it's hitting the R1 resistance spot, as you can see, maybe not so clearly. Let me zoom in a little bit better. And the Admiral Keltner. So these are some of the tools that are part of the MetaTrader Supreme Edition. That is a special plugin from Admiral Markets, and that's showing resistance at this point. And at this moment, I don't have any particular trade in mind on the euro dollar. I think that it could be, this is a zone that is a little bit interesting though, because of the fact that it could be a bounce or break spot. Because if it breaks, there is space to the R2 at 119. If it bounces, there is potential space down to S1 or S2. So I think it is an interesting spot, actually. Just, I wouldn't trade it right now. That's my point. I would wait for the reaction of price to respond to this R1 level, and I'll do that, I think, by using this 4-hour chart. And what I'll be looking for basically is either a 4-hour candle that can close above the R1. I'll tell you the exact level, what that level is here at, this is 118.35. So if there's a candle that can close anywhere around 118.40, roughly close to 118.50, with a close near the high, I would consider that to be a bullish breakout candle. And in that case, that could be an entry with either a loose stop loss below the weekly pivot point, or depending on how big this candle is, if it's a volatility candle, but for a volatility candle, it would have to at least be 50 pips, at least on a 4-hour chart. So it would probably have to break above 118.50. If it breaks above 118.50, I might even use the stop loss below the candle low itself rather than the weekly pivot point. That's a trade-off between using a tighter stop loss that offers a better reward to risk ratio. Why? Because obviously if my stop loss is here at the purple line and I'm aiming at the R2, I have more and I'm entering at around 118.50. Yeah, it's a better reward to risk ratio than if my stop loss is all the way here, of course. So if price fails to break above 118.50, but it breaks above 118.35 like this, I'm inclined to use the wider stop loss because that candle could easily see a little bit of retracement before seeing upside. Whereas if we have a stronger breakout candle, it might see a small retracement, but typically it will follow through immediately. Now, the alternative, like say scenario B, is that there's a failure to break above the R1. Either there's a false break, price pushes up, and there's a wick, and there's like this doji, maybe like this, somewhere, something like this. Well, that could be a reversal trade, in fact. So a short setup, is from my point of view valid on a candle like that, with a stop loss above the candle, and aiming at the S2 and S3. From an R2R perspective, it has a better ratio, but reversal trades may be a little bit riskier. In this context, I think both are a little bit risky because really price is not trending at all. It is just going flat, as you can see in the last 2 weeks. Pretty tight range of about 120 pips. So not a lot of movement since the beginning of December. I mean, movement up and down, but I mean within that range. That's what I mean. So from that point of view, a rejection is not so strange. Now, one idea, as I said, would be a candlestick that shows a false breakout. The other could be a respect for the R1. The price doesn't push through it. And I would probably have to see two bearish candles. Like even if they're smaller candles. Or engulfing twins. Either engulfing twins, that would mean maybe a small retracement of that candle and downside like this. Or two bearish candles in a row could also be a confirmation of a bounce. So those are all the different candlestick patterns that I would be expecting. We went through 5 different scenarios, and that's what I'm monitoring at this R1. So let's see what happens. Tomorrow we have another webinar. We can review what I just said and see if that played out or not. I mean, I'm sure there are scenarios that wouldn't be covered by these 5 steps, but there is a good chance that it will, right? These 5 scenarios are, then again, covering a good number of cases. So let's see if which one of those happens, and if there's follow through. One thing to keep in mind is that next week the market will slow down a little bit. Sometimes there's unexpected movements, though, even though there's a holiday or holiday week. It could already affect this week, so that's a little bit tricky when we get closer to holidays. But let's see. We'll find out more by tomorrow, I guess. In any case, you know my plan. And by the way, a conservative target could still be also this bottom, just in case it stays in the range. So that's something to be aware of as well. All right, so that is about it, I think, for the euro dollar. Now, if it gets down to S1, S2, by the way, those two could be bouncing spots too for upside, and this could basically make a bigger correction like this. That's something to be aware of in my view as well. If it does make the bullish breakout, doesn't necessarily mean uptrend either. It could expand the correction, this is the first part of the correction. The second part of the correction could go to the R2, and there could be a third correction as well. That R2 could still be part of that correction. So there could be like a 3-wave up and then a 3-wave down. So the break of the R1 is not necessarily with the trend setup as yet. For this to be uptrend, it would need to clear and break above the R2 and R3, and that would take some time and some price action for me to see that confirmation. All right, so now we didn't see any, I would say, clear continuation patterns, chart patterns on the euro dollar, but pound dollar, I think, does offer that, and you might see it already. You might recognize this pattern as a bull flag, right? The two green lines connecting resistance at the top and support at the bottom. It is a shallow angle. There's a fair amount of momentum prior to that, and the choppy downside is typical for a flag. Now, the thing is that it did break below the 38. I like flags that stop at 38, but the 50 is not bad either. It's okay. If it were to break below the 50 fib, then I wouldn't say this is a bull flag anymore. But don't underestimate the 61.8 fib and the S1, which could be still strong bouncing spot. If it were to break below that, then I would say that this is definitely not a continuation pattern to the upside, and a downtrend is possible. At least a breakout, at the very minimum, a breakout between S1 and the S2 and the 78.6 fib there with the red arrow is possible. All right, but for the moment, the real trade that the breakout suggests is the break above resistance, like here, or the bounce at the bottom of the flag, which already happened in the past. Now, it could happen again, but I don't know. This would be, I think it becomes a little bit unlikely that it would bounce again at the bottom of the bull flag. It might, but already had double bottom at the 50 fib. So I think that trade is already behind us. It's either a bounce at S1, a break at S1, what else? Or this breakout here, in my view. So those are the spaces that I see on the pound. We can zoom into lower time frames though, because every time frame will give us kind of a different viewing point. And yeah, as I said, I'm not sure if price will get down to here. It could. It looks like it's making a correction like this. We do have momentum up. It's a little bit tricky in this entire flag because the flag itself still has a bearish kind of angle to it, although it is mild and corrective, and ultimately a bull flag on the 4-hour / daily chart. I wouldn't be surprised though that price will eventually break through these resistance zones for this breakout, and that this could be the end of that flag, and that this is now the start of the break of the flag. And I don't think that there's nothing really to say when the flag will end. That's why it's always a little bit tricky to trade it before the flag breaks, because the flag's gonna extend. So the most conservative thing is to trade the break of the flag. But sometimes, if you're lucky enough to anticipate the break, you might get a trade before the breakout. Now, if it's a bit tricky at the spot to say yes, this will be the bouncing spot for this breakout, because this flag has lasted quite long. So it is finding that spot is not easy, and it could fail too. So it's a risky spot. Let me say it this way. The better approach might be, because we got some bullish candles here, but it is a risky spot for a bounce. The better, more conservative way might be for let's see, maybe at least to see two bullish candles in the 4-hour chart, right? That would increase the chances that this downside is over. Because now we still have a pretty bearish candle, so it could be a bit early. But two bullish candles in the 4-hour chart, that would indicate that this is a fractal at the very least, and that we have at least a higher low, and that could help with the rally that might appear. So it's still on the early side, as I said. All right, so I was looking for dollar yen to break to the downside, but of course I knew that there is always a chance that the dollar yen, that this continuation pattern could reverse to the opposite side. So this is a continuation pattern 2, as it's making this kind of corrective triangle in a way after the break. So we see a break of support, and then we see kind of a pause. That's a continuation pattern 2, but sometimes price doesn't continue. We have momentum, but it failed to break and actually breaking the opposite direction. And that can happen. Continuation patterns don't always have to follow through in the same direction. This is an example of that. But nothing is lost if you wait for the breakout to occur and it doesn't occur, then nothing is lost. That's one advantage of waiting for the breakout. In this case, we're getting let's say a counter trend breakout in a certain way. The trend is a little bit maybe not as clear, so depending on how you look at it, you could still say yes, it's an uptrend. I mean, on the daily chart, you could say the support trend is still valid and stuff like that. But on a 4-hour chart, I think that this is still part of a downtrend because of the fact that we're having lower lows and lower highs. Okay. Now, this upside break I thought was limited because of the fact that resistance is still close by. So in my view, this is more of a reversal territory right here than a breakout territory. But you never know. Sometimes the market surprises kind of your analysis, and it could break above that Keltner and head toward the R1. It is possible, but it is a setup that I would skip, or I will skip, because of the fact that, in my view, the upside is limited in space, as I expect a bigger. This could be a 3-wave correction, but I expect still a bigger bearish correction. Why? It is partly based on wave analysis, partly based on wave patterns, and sometimes those could be wrong, but that's okay. If I don't trade it, nothing is lost. Anyhow, it's overall pretty corrective and choppy chart on the daily. So I think that this will happen on the dollar yen, and then up. So that's my bias. That's why I think that the space to the upside is limited. But I would change that if price breaks above the R1, depending on how the price action is looking like. Alrighty, so Aussie is looking bearish at the moment. It's trying to break through the fractal, and that could offer some downside potential. All right, so it is strong momentum to the upside. That's true, but it looks like the bulls are losing control. There's a higher low break right now of these support fractals, and price could test lower support. Lower support, perhaps like, for instance, when we put a fib from here to here, 38, 50, 61.8 fib, price could fall to that region. We'll have to see how price responds there. It could be bounce zones there, as price makes maybe a bigger kind of 3-wave move up like this. Kiwi is the same story from this point of view, right? Could also make a correction first before making a continuation potential upside. It also depends on how fast price falls. I don't want to necessarily, you know, declare that for sure a bounce will happen here, but there is that chance. There's a decent chance that could happen. Part of the reason is that, well, Aussie maybe looks a little bit clearer, but well, there's I mean, it is a bit tricky with these Aussies and Kiwis in the sense that, especially with the Kiwi, this could be the end of the correction too. So that's not an easy thing. But we have higher highs and higher lows. So for the moment, I think a bounce is likely around halfway, probably. And even if it's just a rally to retest this high. All right, dollar CAD finally moving up. Took quite a while. This could be a breakout. It's a difficult breakout because it's such a strong resistance zone. This is a continuation pattern too, by the way. Some type of continuation pattern. It is a sideways correction between those green lines, and there was bullish momentum prior to that. So when price goes sideways like that, that is a continuation chart pattern, and that often offers space if price breaks that pattern. So if price breaks this, which it's trying to do right now, there's a good space up in here. So how to measure the breakout? This 4-hour candle would probably be okay. Daily candle, keeping an eye on the daily candle, could be fine. Hourly candle had already a breakout, an early breakout, but that's always a little tad riskier, of course, trading breakout, because it could turn out to a false breakout and you wouldn't notice on a 1-hour chart, right? You would get stuck in that. Euro yen. One of those, I mean, I'm not often, let's say I'm not, normally when I look at a chart, there's always something that's interesting. With the euro yen, I'm struggling a little bit to find structure. I think we have to zoom out to the daily chart to really kind of see what's going on, and that is just probably this, very simply. And there is momentum prior to that, and it's been extremely flat ever since, for a daily chart at least. Now this daily chart flat, right, on a 4-hour chart has roller coasters up and down. Most recently, it has failed to reach the bottom 3 times. Here, here, and here. It didn't really reach the top or bottom of that zone, which makes it a little bit more difficult to trade as a range kind of setup. And at this moment, you can see the price is getting again close to the resistance zone, but not there quite yet. So depending on how your dollar moves as well, how your dollar responds to that resistance zone, how the dollar yen will respond to the resistance zone. This euro yen could move a little bit up still, but if my analysis is correct at least, and the euro dollar stops at the R1 or the R2, the dollar yen also stops at the resistance levels I mentioned, then there is a good chance that euro yen will bounce at this resistance zone again. Eventually, I think the euro yen, because of the continuation pattern that we see on the daily chart, will break to the upside, in my view. And I think a good thing could be to maybe put a fib maybe from here to here, 23.6 fib. And the target could be the minus 272 target upon the breakout there. And could extend further, of course, potentially. But first things first. Whether it's going to break now, as prices, it's not there yet, but as it's approaching that resistance level or zone, um, whether it's going to break or not is always a question mark. We can always keep an eye on these daily candles, right? As they approach this zone, let's zoom in all the way. Keep an eye on this daily candle. If there's a good strong daily candle above that zone, there could be the breakout. But I'm still leaning towards a bounce. Even though this is the third approach on the daily chart, this could be the third approach of this resistance zone on the daily chart. One more bounce, I think, seems likely, and then there could be that lift off because the euro dollar, I think, is going to be eventually an uptrend, and the dollar yen might be an uptrend. That could give the momentum or the ingredients for the euro yen to start that uptrend. I'm not sure if it's now. In my view, not yet. So from this point of view, bearish candlestick patterns around 134.50, 134, 134.50 could indicate a bearish reversal potential for the euro yen for the moment still. Euro pound looks awfully messy to me. I just don't see anything really interesting in such a low volatility, slow moving pair. All right, Euro odd. Funny enough, I actually did make the breakout to the upside. That's funny. I was looking for the upside break, but then eventually I was skeptical because it was making what seemed like a continuation pattern to me called the bear flag, but actually it broke. It did break to the upside. It's funny, and continued, but it didn't break this flag to the downside, so nothing lost for me. It's just funny that I was looking for upside and then got swayed into thinking that maybe this is a continuation pattern, but actually still making an upside. It's funny. Can happen sometimes. I think that with the 4-hour candle we just had on the euro odd, that's a pretty sturdy one. We already had follow through on that actually. Um, there could be more upside on this euro odd. Probably the best is now it's a little bit late because it's at resistance. So the trade was from here. This was the breakout candle. And it's been moved 50 pips from that breakout candle. Now it's at that resistance spot. Wouldn't be too good. But I think that there is still potential for upside. Depending on how it responds here, I'll show you. I'll just take a sip of tea. All right. So what probably would be needed is to see how price responds to the long-term moving average, because this could still be a bouncing spot. So what could happen is that if there is a fractal here, right, and candles like this, it could also be a space where where price falls back to the bottom and perhaps breaks down. It's possible. Or if price keeps pushing through, then these moving averages will be pushed over. I would be looking for a bull flag like this to those 21 EMAs, and I would look for a follow through to the upside. All right, so push, flag, continuation. But if there's some hesitation here, it could indicate a small dip or breakout too. So let's see how price responds with this 144 EMA. Euro New Zealand also strong upside here at the moment. Good momentum to the upside. Higher highs, higher lows, and could be the same thing. Although with the Euro New Zealand, I'm more inclined to trade it to the upside than to the downside for the moment. But let me think for a second. I think that, hang on. I think there could be a retracement to the 21 EMA, but that it will be a bouncing spot. So this zone in here with these fractals, that could be the bouncing spot for upside. All right. Pound yen, yeah, I thought could be ready for a breakout to the upside if it breaks through these trend lines. Let's see. Um, all right, maybe a few non-currency pairs like gold. Let's take a look. All right, first maybe at the daily chart. I think that this could see an upside like this, three-wave up to retest resistance zone up in here, which in itself could be again a turning spot for downside. So yeah, I think that more bearish correction is expected, and that bearish correction could take price if we put a fib from here to here. 5038.2 fib could take price down to the minus 61.8 target or minus 100 target. So this is what I'm expecting: down, up, and then maybe something like this, down and then up again. Alrighty, I think that oil is still in that resistance zone. It hasn't moved away from it. Just hanging in at the bottom there. Nothing new. S&P 500 keeps rolling higher. DAX is struggling though. Breakout to the upside is facing some resistance. Dow Jones keeps moving up too. Let's see how far these equity and stock indices can push up in 2018. They surely did in the last few years, but will they do so in 2018? That's the question. And I think no one knows the answer. I would just keep an eye on these weekly candles. As I said, 6 weekly candles that fail to post a higher high. That could be the first kind of clue of some difficulties for indices. So let's see, any questions? Let's see. Hi, good to see you, Ilya. Hope that everything is going good and good trading this year. Anything you want to take a look at? I think that silver is hanging in there just like gold. Nasdaq is also having the same kind of, maybe even more momentum than the others to the downside for the moment. But as I said, really 6 weeks, I think, 6 weekly candles. Here are some stock indices. Amazon, Facebook, Google made a higher high. Mm, 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 mm. Looks a little bit like Head and Shoulders here. Difficult spot. Obviously, losing some steam at this moment could be better for price to make at least a pullback to support first. Yeah, probably not the best moment at the moment. I think for these CFDs. All right. So yeah, do you have any questions actually? Because Ilya, maybe you want to take a look at a particular chart. Let me know. I think that for the moment, that's what I wanted to share with you. But let me know if you have any questions. If you're looking, as I said, to get the MetaTrader 4 or MetaTrader 5 Supreme Edition, MetaTrader Supreme Edition, basically, click on platforms, go to the second button here, and you can get the extra features. This is a special plugin for Admiral Markets, including the pivots I showed, including the Keltner channel, including the mini terminal, but many more features besides that. So that's something to think about. Otherwise, we'll be with the new webinars tomorrow, right here. There we go. I got one. Nanette has one. And Thursday, we're going to take a look at breakouts and fakeouts. And each day, there is this real-time daily trading ideas tomorrow again as well. So you can sign up for more webinars right there. Odd yen, last but not least, I think odd yen and New Zealand yen are a little bit in kind of a tricky spot where there could be a reversal if it breaks below this formation like this. Kind of trying to make a last push up, but it's with very slow corrective price action. So these could be in reversal position. All right. So that's about it, I guess. No questions. That's all good. Thanks for being here. We'll be back tomorrow. We'll take a look what happened with the euro dollar 4 hour chart and how it responded, and we'll take a look again at all of these currencies and other financial instruments. So good trading, and talk to you soon. Cheers.